Good morning and welcome to the next episode of Refreshing Monday, surprisingly every Monday at 8 a.m. My name is Thomas and I'm bringing you a handful of inspirational business ideas that might be relevant for your company. So let's get started. Companies go into a lot of effort to satisfy their need for capital. Bank credit, loans, factoring, all those financial services have one thing in common. They are all B2B. But why not skip the middleman and take money directly from private people's savings? Most companies limit their search for financing to banks and investment funds. But P2B lending is an interesting alternative to issuing bonds, which is usually associated with bigger companies. Small and medium enterprises can use multiple options of financing in P2B model. For instance, there are ways to finance your investments in new products or services through Kickstarter or Indiegogo. As far as the finance goes, this concept is quite young, but it's worthwhile to take it into account while doing your financing research. The other option is that the company is looking for a short-term liquidity improvement. This is an interesting concept for both the borrower and the lenders. So how the process works is companies apply for the kind of credit line through a service provider. First check and interview is made. Usually it takes up to 48 hours. Then cash is collected from multiple borrowers, which is only a part of their investment amount, and that spreads the risk in case of default. Later on, a company repays setup fee, usually 3 to 4%, plus whatever they borrowed the money for. It may not be the cheapest solution in terms of cost of capital, but it sure as hell is the fastest. And today, time is worth more than money. Private healthcare, insurance, education, sports club memberships, large companies and increasingly the smaller ones are giving a broader and broader range of employment benefits. They blur the actual income and hope to get improvement in their employment termination rates. And how does it work for them? Actually, not so good. Research shows that most of the employees tend to undervalue the free benefits received from their employers, and as a result they have very limited use as an incentive for them to stay. What's also interesting is the fact that more than 60% of sports club members that receive their membership through company benefits use it less than once a month. What's my idea? Kill all the free benefits for employees. I'm serious, all of them. Crazy, right? But maybe not so much. Firstly, you will see the sudden decrease in your cost of employment. Secondly, you can offer a participation model, where a part of each benefit's cost is covered by employee himself. Even more interesting would be to make it a variable, where the more you use a certain benefit, for instance, sports club membership, the less you pay for it. I believe that this model will not only increase usage of those benefits, but also it will allow the company to raise the awareness of employees about the value of each benefit it offers. For all the people that hate me for giving such an idea, my sincere apologies. That's all for today. and see you during next Refreshing Monday, as usual at 8 AM. And as always, have a good day and some changes for better.